right, let's talk about your investment in mutual funds with a higher AUM. And a lot of times when viewers send across their questions to us, and funds with higher AUM often becomes a concern of an exit from a particular fund. Whether you should be exiting a fund with higher AUM, what kind of flexibility higher AUM mutual funds provide to a fund manager, what are the restrictions, and how does it impact you as an investor? Let's understand all of this. I have with me Kaustubh Belapurkar, Director, Fund Research, Morningstar Investment Adviser India. Kaustubh, good evening and welcome to the show. So let's just simplify funds with higher AUM. What exactly are we talking about? In a layman term, how would you like to explain that?
Sure. Firstly, Kavita, thanks for having me on the show. So AUM is obviously, very common parlance is basically the assets that a fund is managing. So there are pools of investors, that invest into these funds. And, if I'm putting 100 rupees and another investor is putting 100 rupees, the size of the fund obviously grows. And, the overall asset that particular strategy is managing is basically what the AUM would denote, and obviously, the context of AUM has also kind of changed over the last many years where, in the past, maybe 10,000 crores is considered high. Today, we have several funds, which manage in excess of 50,000 crores in a single strategy, right? So I think from that context, obviously the fund size has grown, but the overall market has also grown. So just from that perspective, AUM needs to be looked at from that context.
I think you have also given us a list of funds where these funds have a very high AUM, and these funds are also strong performers and consistent performance in their own category also. Would you want to list out the name of the funds, Kaustubh?
Yeah, sure. So I won't probably go through all the names, but I think what you would essentially see is you would see, and because there's been so much retail investor interest in mutual fund investing over the past many years, what obviously retail investors would tend to invest in is more long-term investments like in equity funds or balance advantage funds and the sorts. And you would see most of the funds, which are the larger funds, the popular ones, have kind of garnered or have grown in size there. So you would see a lot of like the HDFC Balance Advantage Fund, the SBI Equity Hybrid Fund. You have a couple of equity funds like the HDFC Mid Cap Opportunities, Parak Flexi Cap, the ICICI Prudential Blue Chip. So there are several funds that obviously are kind of north of 50,000 crores, like I mentioned. But again, I think the very important point to think about from an investor's context is while the fund size has grown, which is also great, but remember the market has also grown, if not more than what the fund sizes have grown. Right? And I just want to lay down some context, especially since obviously this whole SEBI categorization exercise that started in 2018, and AMFI publishes this data, right? And the first important data point is when you think about the overall market cap of the Indian market. So I'll focus on equities because as we spoke about some of the larger funds, obviously interest from retail investors has been on the balance and the equity side, right? So even the overall market cap today, and I think there's a recent headline that the Indian market cap now is the fourth largest in the world at about 4.33 trillion US dollars, right? This was probably just 5 or 6 years ago was half that at about 2 trillion, right? So the market is expanded because market caps of individual companies have gone up, and more importantly, newer and newer companies, as we've seen through IPOs, have been coming, and that's been a popular route that's been happening, right? So it's expanded the playing field in that sense for fund managers to look at. So I think the context of the AUM needs to be looked at very closely from that. Obviously, there'll be different strategies that could have different constraints, and we'll talk about that. But I think from a broader perspective, because the market has grown so much, and obviously mutual funds have also been getting increasingly higher flows from retail investors. I don't think that's a necessarily one size fits all that, high AUM is bad or it's good. I think it needs to be looked at from the lens of the particular individual fund and that perspective. I think that's a very important context that investors should have when they think about this, as a fund with high AUM.
Let's also talk about funds across market caps, which by default have a higher AUM. Like, for example, you can expect a large cap maybe to have a higher AUM than a small cap fund. How would you like to explain this to our viewers? Because a lot of times, in in type of funds like Nippon India Small Cap Fund, where we are seeing it's a fund of a very high AUM, and also right now the best performer in its category as well. How should an investor look at that? Because the performance of Nippon India Small Cap versus the SBI Small Cap, there is a vast difference, as well as in the AUM also, versus any other large cap fund from these particular AMCs as well. So as per market caps, how can these AUM impact the performance, and how should an investor look at it?
Sure. That's, I think, two very important questions here, Kavita, and let me, answer them one by one. Right? So you made a very important point that when you think about from the construct of the way the strategy in which a fund is managed, and that's what I alluded to, that you need to look at it from a case specific basis for the fund strategy, in terms of, is the size becoming a constraint for the fund being managed? Because remember, a fund is typically follows a particular set strategy, and the moment, if it becomes too large, can it continue to manage it in the same fashion or manner? I think that is really the crucial question that we need to be asking as investors when we look at a strategy that has obviously grown in size over the years, right? A couple of things. Like you rightly said, large caps, I mean, fairly liquid market cap stocks, high market capitalization. So even if you're buying, couple of hundreds or thousands of crores through a fund in a large cap stock, you don't really own a very significant part of the company. So, that is potentially not a problem, enough liquidity in the market. So I think, for most large cap or flexi cap funds that have a significant large cap allocation, that's not typically a problem in terms of size, where we are at currently, right? When we come down the capitalization curve, that's something that you want to pay more attention on, and for a couple of factors, right? So one is obviously, when a fund manager is looking to construct a portfolio, let's take an example of a small cap fund. Suppose you're a 20,000 crore small cap, right? And you want to obviously buy companies with reasonable positions. Now, reasonable, even if I talk about 2%, now 2% of a 20,000 crore fund is about 400 crores, right? Now, 400 crores of say a company, if you're looking in the small cap space and say perhaps it's a 5,000 crore company, that would be owning about 80% of the company, right? So which could pose a couple of challenges. One is obviously, can you get that liquidity in the market? Because many of these companies could potentially have large promoter holdings. So you'll have to look for block deals and then try to get that stake. And B, when on the other side of the coin, like when your conviction is played out, or maybe your conviction didn't pan out as you expected, you want to sell the counter, how quickly can you, and that typically tends to become the harder part, how quickly can you sell that kind of counter if you're holding a significant portion of the market. So I think those are the things that fund managers will look to balance. And I think the one thing that we've seen with a lot of managers, because like I said, it's the space is also growing. So, I mean, you use the example of the Nippon small cap. It is obviously, it is one of the larger funds. It is about 43,000, 44,000 crores in size. But remember, it's also built a pretty diversified portfolio of, I'm forgetting the counter stocks, but probably across, north of 150 stocks now, right? So they're taking bets that are, kind of, to pan that out. Now, obviously, the question is that have they delivered that with a diversified portfolio like this? I think the proof of the pudding is they have, right? Maybe they didn't have 150, but they've always had, for a long period of time, north of 100 stocks. So I think, that's the good part. And like I said, there's enough playing field there. And plus, obviously, when you get larger AUM, there are benefits of, having access to better research, obviously building your in-house research to continue to find newer small cap companies. So there are pros and cons to that, right? And I think the other important thing, which a lot of, and even Nippon has done in the past with their small cap fund, is when they believe that, the size can potentially become a constraint for managing the fund in the way they wanted or intend to manage it, they tend to stop flows or limit flows, right? Which is a very good move, because in a way you're trying to protect the existing investors at the cost of getting fresh additional money, because if your fund's doing well, investors will gravitate towards it, but you're actually taking that judicious call of protecting investor interest. So I think that's the one thing that we've seen several fund houses do it in either their small caps or some of their large and mid cap funds, and which I think is a good sign, because that's kind of looking to protect investor interest and maintain the investment process and the mandate of the fund as close to what they intended it to.
Right. So
Yeah. Sorry.
well,
The second question.
sure.
Yeah.
Yeah.
The second question, about how should an investor look at it, right? I think the first and the most important thing, because it's kind of when you think about investor you think about larger funds being safety heaven. It's like that's the popular fund, and investors may tend to gravitate towards some of the larger funds or the more popular funds that have been doing well recently. I think the simple point to that, every investor's perspective or needs are unique. The first thing, and we always talk about it, they need to think about what are their risk return objectives, their investment time horizon. So we use the example of a small cap. If I'm an investor with a 3-year horizon, no matter how good a small cap fund is doing or how large and well managed it is, I will not buy a small cap fund, right? I will move towards a large cap fund, right? So I think that's the very important thing to keep in mind from an investor's perspective when you're investing in funds. Do not purely just look at large funds and invest. Think about the stability of the team, the stability of the way the portfolio is being managed. And if you're holding a fund that perhaps has grown or you think has grown too large in size, the easiest exercise you can do is look at how the portfolio has moved over the last few years. Does it look like it's being run in a similar style, or has the style deviated? If the style is deviated, then you might want to question, do I hold the fund or I exit? But if nothing has changed, the manager may take prudent steps to kind of control flows or whatever. So I think you're best to stay invested because it still meets your investment objectives. I think that's one thing that an investor should keep in mind, and not necessarily just purely filter
Right.
funds on
That's the
size.
most important part,
Yeah,
because if the
yeah.
fund is keeping, if the fund is taking prudent action, and also if you think that it's able to meet your investment objective, there is no reason for you to exit a fund with high AUM. So we will discuss more on this, Kaustubh, but then you know what, we also have a viewer on phone line with us who might just want to get some financial planning tips from you for their portfolio. I'm talking about Gopiraj from Chennai. Hello, Mr. Gopiraj, and thank you so much for sending us your questions. So you are doing an SIP of 10,000 rupees in HSBC Mid Cap Fund since last 5 years, and your returns have been moderate, and you want to switch to a better mid cap fund and continue SIP over there, and you want a specific recommendation for mid cap fund, and also you want to understand how can you compound, how can you track compounding returns in the fund, and you also want to invest some more money, fresh capital.
Yes, I would like to do that. So my main question was that, now the amount that is invested is about 6,25,000, but then the overall corpus has come to about 8.75 lakhs. So
Sure.
the entire amount, when I shift it to the new fund, then whatever compounding I can see in my screen right now, but then when I start it will again start from zero because my capital will be 8.75 lakhs.
All right, all right. So let's get your questions answered. So Kaustubh, first, HSBC Mid Cap Fund, your view on this fund?
I think obviously there have been a few changes of this fund. When I think about, so this was for the longest time managed by Somenanath Lahiri. Erstwhile, I mean, this was an L&T fund, which obviously was, with the merger of, HSBC taking over L&T's assets, it became a part of the HSBC portfolio, right? So Lahiri was managing this strategy for a very long time, and I think he exited the fund now in 2019. Vihang, who was the co-manager along with Lahiri, while Lahiri was the primary manager, Vihang then kind of took the main role of this, and more recently even Vihang has moved on from HSBC. So I think from that perspective, because obviously there have been a few manager changes, while they do have other seasoned managers like Venugopal Mangat, within the team, I would think maybe it would be prudent to exit this fund. And, there are obviously several other mid-cap funds that we really like. I think one is, HDFC Mid-Cap Opportunities, which Chirag manages, and he continues to manage, for a very, very long time. I think that's an excellent mid-cap fund to think about. Another one, on our radar is the SBI Mid-Cap Fund, which Sohini manages. I think, these are two strategies that we really like, in the mid-cap space. So that's kind of on, obviously on the question on that specific fund and the action that you should do. I think in terms of just the calculation of how you want to do it, obviously, you've invested, like you mentioned, about 6.5 lakhs to start with, which is now grown to 8.75. So that's, I would say, reasonable wealth creation for you. There are two ways of doing it, right? So when you start with the new fund, obviously it'll show you return on the new fund. If you're doing it through a platform, then there are, they will have tools to show you what your portfolio IRR has been over the entire time period. So you bought XYZ fund, you sold it, and then you bought something else. It'll show you that through that tool, or you can actually do it yourself. It's a very simple exercise in Excel. If you haven't used the XIRR tool, where you just input your transactions by date and amount, both inflows and outflows, you can actually, and the current value, you can get what the IRR of your portfolio has been, even though you've made switches across funds. So I think that's the easiest way if you want to be on top of what your portfolio is returning. That's a very quick way of doing that.
Right. All right. Thank you so much, Mr. Gopiraj, for sending us your question, and hope that really sorts you out. And on that note, let's take a quick break, and post that, let's talk about SIP outflows, record outflows in December. And also, we have more viewers connected on the phone line, and Kaustubh will do their live financial planning after this break.
in association with LIC.
The Money Show with me, Kavita Thapliyal, and let's move on. Mutual fund investors have pulled out over rupees 11,000 crore from SIP accounts in December 2023. Now, this was the highest since April 2021. The net SIP inflow came in at rupees 6,470 crores after offsetting the outflow from gross inflows of 17,600 crore. Now, this redemption comes after the rally in Indian markets as 2023 came to an end, which made investors book their profits. Now, experts say that it might be slightly problematic for the markets when investors take this route. But then let's decode this kind of trend. I have with me Kaustubh Belapurkar. Kaustubh, in last 18 months, December was 1 month where the market performed really well. Now, how would you like to read this kind of an outflow figure? Would you be calling it as a profit booking session? Because we are also looking at the kind of investors, Kaustubh, who have not seen volatility in the market so far, who've never seen a market fall. Okay, so if they are seeing returns in their portfolio, they might just want to take out money. Is this a one-off kind of an event that we saw in December, or you think it's slightly concerning, and the Jan's data would also give us a clear picture on this?
Sure. Kavita, I think, my perspective on this, is that overall the trend is very, very positive. And, obviously, you'll have these kind of periods in between where it is only prudent for investors to book some profit, especially if, and maybe it's a sign of good, mature investing where, if you're over allocated to a certain asset class, you want to book some profits and bring that down. And that's probably my reading of the way things have panned out. Because if I look at the overall numbers, obviously, the SIP assets, the AUM that AMFI publishes has been going up significantly month on month. Obviously, some part of that is market movement, but you can see the increase in the number of new SIP accounts, even on a net basis. All of that is, kind of every month, going up and going up by a pretty healthy tick. So I think these months, to my mind, and I mean, who's to say that maybe January, if markets continue to be buoyant, you could have a little more period of a little bit more of profit booking. And I don't particularly mind that, to be honest, because obviously, like I said, if you want to reallocate back to fixed income or, because you're over allocated equity, that's probably a good mature investing sign. I wouldn't make too much of this this data because, the general trend is, I think, has been super positive, 7.64 crore SIP accounts, I think almost 10 lakh crores of SIP AUM that AMFI's published. So I think that's all tending towards a kind of really good interest in systematic investing, which a lot of investors are doing, and I would expect over the years this trend will continue to be quite healthy. So I think these periods will come and go, but broadly the trend should be upwards.
All right, and we shall also wait for the Jan inflow and outflow data to get us a clear picture and to see where the SIP trend is also going. With that, it's a wrap on the show today. My time is up, Kaustubh. Thank you so much for being on the show and helping our viewers. And I'm going to sign off, but I'm going to leave our viewers with our WhatsApp number and email ID where you can reach out and send us your queries. Thank you so much for watching. Goodbye.